Not that I'm a great believer in qualification. I know people with zero qualification talk so much sense, and I know highly educated people who talk a lot of nonsense. No, production will be handled by production guys, sales will be handled by sales guys, finance will be handled by finance guys. Completely wrong statement. If somebody can say I'm a non-finance person, it is the person who says I'm a finance person. And the rest of the organization are the real finance guys. I think in 80s there was a tendency, most people would go for, or you ask a typical parent, what do you want your kid to become? They'll say engineer. Because the thinking was the owner should be production oriented. 90s or maybe late 80s, the realization came if you know how to make and you don't know how to sell. I think now if you realize that if you understand production, you understand selling, if you don't understand finance, you'll still pay a price for it.
Every great shift in history began the same way, with a bridge between nations, between industries, between people and ideas. At the Bridge Chronicle, we believe that a bridge is more than just a crossing, it's a transformation. My name is Janhavi, and welcome to our segment, Bridge the Gap, where we speak to thought leaders shaping our future. This episode has been brought to you by Java. Thank you so much for your support. Today we have on set Dr. Anil Lamba. Dr. Lamba is a globally respected finance expert, educator, and of course, best-selling author, many feathers in his cap. Dr. Lamba has trained thousands across 5 continents, be it individuals or organizations, and he's really great at breaking down complex financial concepts into simpler, clearer, actionable insights that is easy to digest, even for those without a financial background. So thank you so much for coming on set today. It's great to have you here.
Thank you, Janvi. Pleasure to be here.
So while I was researching for this podcast, I came across a very interesting statistic that said that only 27% of Indian adults are financially literate. What does this mean to you? And when you define financial literacy, is there a checklist that comes to your mind?
I think number one, I'm pleasantly surprised to hear the number is as high as 27%. I thought it was far lower because over 95% of business failures are attributed to financial mismanagement. So my worry really is, even those 27% who claim to be or who think they are financially literate, there is still a long way to go. Because unless financial intelligence percolates across the organization, that organization will certainly not flourish, but many times it won't even survive. So that is heartening to know it's 27%. I hope it is true. I hope it grows. I am doing my bit to increase that number. Second part of your question was?
How do you define financial literacy?
Financial literacy. People have a wrong notion about it. First of all, many people confuse finance with accounting. You don't need to be an accountant. You don't need to understand anything of accounts in order to understand finance. Financial literacy is the ability to take financially intelligent decisions. And therefore, everybody's actions have to be financially intelligent. And this also tells you that it doesn't help if the finance department is good. I mean, one could have the finest finance department in the world, and that organization can still suffer from financial mismanagement. Because unless everybody's actions are financially intelligent, that organization's finance management cannot be at its peak. So my definition of financial literacy or finance management is ability to take those actions by which the bottom line becomes stronger. And therefore you need to understand the financial impact of your action.
So when I was looking at this 27% number, my first thought was, how is that divided among educated classes? Let's say primary education, secondary education, or those who are college educated. So even amongst college educated Indians, only 38% of them are actually financially literate. So when we look at, say, them entering the corporate world, of course, we might see poor management creep in fairly unnoticed. So according to you, how does poor financial management show up in day-to-day operations?
In every aspect, because once again, I'm very impressed by this number, which I have my serious doubts about. Uh, Primary level, there is no finance taught at all. Secondary level also, it's lacking. In fact, I just wrote a book on finance for kids because kids and young adults, because I think every client of mine, and those clients are industrialists and business people and so on, they must have somewhere along their interaction with me must have blurted out at least once, I wish I was taught all this when I was in school. Because later on I made mistakes, I paid a price for it, and then I realized I must understand. So primary and secondary level is missing, but it should be included. And even when you study at a college level, unfortunately, the approach at that time is, more exam oriented. So you still haven't understood the practical application. And by the time it comes for a practical application, unless the guy works in the finance department, he calls himself a non-finance person. They think it's not my responsibility. I think which is the biggest mistake we make. One could be a salesperson. I mean, if you're out of the field and somebody gives you a offer of a large order but offers you a price of 80% of what you're charging or 70%, you got to take a call. This is a financial decision, not a sales decision. A production fellow's production scheduling has financial implication. A purchase manager has to understand when he buys materials for the company, what quantity to buy, what each of these is a finance decision. So unless these people are financially literate, they will not take intelligent decisions. And the organization pays a price for it.
You've advised countless people on creating and making sustainable decisions. And even in your YouTube videos that you've uploaded recently, you spoke about how to plan capex or analyzing ratios. Something that you feel is the simplest way or the simplest step a business owner can take today to become more financially literate this week. What would that very simple item list be?
There are too many. I don't know how to put one over there, but as a business owner, what I find scary. Tell me, when should we call a business a success? The revenues that a business generates should, imagine you're a manufacturing company. So the revenue generated should exceed the cost of production, should exceed the cost of admin, should exceed the cost of selling. But what it should also exceed, which many people don't understand, is the cost of capital. There is huge ignorance about the concept of cost of capital. First of all, there's an ignorance about what is capital. Capital includes both owned and borrowed money. And if you ask a typical business owner, do you know your cost of capital? He will attribute a cost to the borrowed capital. Whereas the truth is, the owner's capital is probably the most expensive source of money available. So many organizations that appear to be making a profit, you pick up the P&L, they look like they're making a profit. But if you minus the owner's cost of capital, they may be negative. So to do an impossible task, what you asked me to do, if I have to give one item, if business owners are watching this, guys, at the earliest opportunity, understand the cost of capital in your business, cost of your capital. And to give you a ballpark figure, which many people listening to this will not digest, I think the rock bottom you should attribute to owner's capital is maybe 3 times what borrowed money costs you. Now, unless the business revenues cover all this, your business is not a success in the real sense of the term. I'm leaving too many things unsaid. Let them ponder over it and come up with it.
Sure. So you have trained, of course, thousands of business owners as well as individuals in, say, high-ranking positions of the companies. Something that you had mentioned in your Sunday Musings column is good finance management alone cannot make a business
Correct.
successful,
Correct.
but bad finance management can single-handedly destroy it.
Correct.
Something that we often talk about or we see a lot even on YouTube or Instagram Reels is common mistakes that entrepreneurs or founders or business owners are making. According to you, are there any uncommonly known mistakes that people are making in leadership positions that they are just not aware of?
Again, the list is too long, but if I give you a few, first mistake many founders make and business owners make is they focus too much on generating sales rather than making profit. One has to remember business is not about generating top lines, it is about bottom lines. It's a tragedy if your top line is going up and the bottom line is coming down, unless you're doing it as part of a strategy. Some people have to set up a business, have a certain amount of anything by design is acceptable. But when you focus on top line, thinking that is how you measure the success, I think that is one big mistake they make. Second, uncommonly known thing is that they assume profit is equal to money. Nothing can be further than the truth. Profit and money have got nothing to do with each other. It is absolutely possible your business makes lots of profit and there is no money in the bank. It is equally possible you're sitting on huge amounts of bank balance and you still don't make profit. Now, both these constitute the two pillars on which successful businesses stand. Number one, ability to generate profit. Number two, ability to manage cash flow. Anybody whose business is making a profit, that person has, in my opinion, won half the battle. The other half of the battle will depend on your ability to manage cash flow. This is a neglected area. I think people should focus on it. Then there is lack of consciousness about cost of capital. You assume owners' money to be free. I know so many business owners who are trying to evaluate a project. They do some cash flow projections. They look at the projections and decide, can we afford to borrow? And they study the projections and say, this project can't afford borrowed money. So what do? Let's put our own money. Folks, if your business can't afford borrowed money, it certainly doesn't deserve your money. Your money is far more expensive. So there are too many such things.
Very interesting. Something that you just touched upon was the top line and the bottom line of things. What area should a focus be on? Should it be more on the top line? Should it be more on the bottom line? And as the company grows and expands, does one change their focus?
No, I think top line and bottom line both are important. Sometimes people misinterpret when I say focus on bottom line, the top line not important. Of course, without a top line, there can't be a bottom line. But when I emphasize on the bottom line, what I mean is we are not interested in just about any sales that you bring. The sale that you bring has to be such, the prices quoted have to be such, the terms applied have to be such, the credit period offered to the customer has to be such, which eventually brings a healthy bottom line. So top line is a means towards achieving an end. So I think both are important. Focus on top line, but the right kind of top line and the right prices. That's another area people don't understand. I was writing in one of the musings. There's a term in finance called compound interest, which has been flogged so much. I think even every child knows power of compounding, power of compounding. And I was writing in that musing, there's another word in finance, which is equally, if not more important, called contribution. And all of us need to get together and popularize this word as much. Contribution is a game changer. If you understand contribution in tough times, you might be able to sell your product at a loss and still your bottom line goes up. The message here, without people won't understand unless they go deep into it, that if you sell your product at a loss, but you should never sell it at a negative contribution. That means your profit can be negative, but contribution should not be negative. If that is the case, you will be able to survive tough times. Now, how does that happen? People will have to maybe look it up somewhere. What does contribution mean?
Or maybe if you can make a YouTube video in the future
we could do a
covering
separate
that.
video on that. Absolutely.
Yeah, that
Happy
would
to do
also
so.
be
Yes.
great. Something that I often talk about with my friends who are business owners as well is that we often have to be generalists and not specialists, in the sense that we have to handle multiple departments at once, whether it's HR, marketing, supply
As a
chain.
business owner.
As a business owner. What would you say is the best way to keep an eye on the finance department or having financial reviews at the same time, managing these other 100 things that you have to manage?
You are right. A owner has to be a generalist. Like good old days they used to say this colleges that have this what is that curriculum called? Liberal arts. Now, liberal arts really was started with the kings and clergy. That course was meant for them. A prince, for example, has to know everything about everything. So the liberal arts curriculum is very vast. Similarly, what you're saying is absolutely correct. The entrepreneur should have a fair idea of everything. But what should he focus on? He can't focus on everything. My biased thinking is if you have to choose one or two, keep finance in your portfolio. If you take your mind back many, many years, I started teaching in B schools. I think in 80s there was a tendency, most people would go for, or you ask a typical parent, what do you want your kid to become? They'll say engineer. Because the thinking was the owner should be production oriented. All functions are important. Question is, what should the owner handle and what should you delegate? That time thinking was owner should be an engineer. You should know how to make. Everything else can be handled. I think in the 90s or maybe late 80s, the realization came if you know how to make and you don't know how to sell, you still get into trouble. So the focus shifted. No, owner should be marketing oriented, sales oriented. I think now you realize that if you understand production, you understand selling, if you don't understand finance, you'll still pay a price for it. So all functions are important, but my opinion is the owner should keep the finance function. They should handle it themselves. They should exactly be aware of what is going on. Now, I mean, so many people, you should take care of finance. I don't have time. I say you don't have time because you're doing too many things that you shouldn't be doing. If you make a list of all the activity that you do in a day, and in that list, anything that is delegatable, please delegate and focus on finance management. It will pay you huge dividends.
So while running a day-to-day business, right, looking at the day-to-day operations of a business, how would a person put this into practice?
For that, I'll have to give you a 2-3 day. I can give you a whole blueprint how to put it into practice. And the first step has to be to become financially literate. Because the moment you say, "Mera kaam nahi hai," then you don't even know anything about it, which is inviting trouble. So, and financial literacy, first of all, the owner has to be completely financial literate, and then you have to see it trickles down to the lowest level in your organization.
I think that must be one of the hardest things to do, ensuring that there's a trickle-down effect.
Not really. We have models for each of these. I have a concept called FIO.
Okay.
FIO stands for creating financially intelligent organizations. Financially intelligent organization as opposed to financially intelligent individuals. If a bunch of people from a company come and attend programs with us, I say now we've created a handful of financially intelligent individuals. That doesn't mean the organization has become financially intelligent. And for that to happen, half the job is to take financial literacy top to bottom. We've got methods for all of that, partly live, partly through e-learning, partly through videos, etc., etc. And the other half is on how to make sure the systems are in place, the right reports are generated, they are generated at the right time, they reach the right person. And by the time the report reads that person should be trained to read, understand, interpret, take action based on that. Then the organization would be a financially intelligent organization. This is probably the first of its kind, like an ISO certificate in finance.
Yeah, great.
This is the ultimate, I think.
You've interacted with so many owners, entrepreneurs, founders. Even recently, like you just mentioned, that you had multiple training programs and you're always on the go, you're always meeting different organizations and people. In your experience, have you noticed any behavioral changes that have happened in owners and founders over the years when it comes to finance?
No, no. When they come to us, they are of the same opinion, finance. First of all, some people, owners, by the time they come to us, they've realized it's important because, I always say every client of mine is an injured fellow. He only comes to us because he's paid the price of, he or she, paid the price of not understanding finance. But down the line, senior most people also, sometimes they are sent and they come there thinking, why am I attending this? Finance. But the funnily, people who spent a lifetime saying, not my job, it takes less than 30 minutes to have a 180-degree transformation from saying, not my job to saying, how the hell could I think this is not my job? Interesting part I find is very, very odd. Years you spend thinking it's not mine, and it takes 30 minutes for the realization to set in. And then they are all completely involved. They're excited. So it's such an exciting subject actually. Once you realize that you have to learn it and it's important, then they are completely sold about it. So
where does the hesitation normally start with trying to learn more about financial
hesitation
management?
starts in two places. One is, of course, the belief that production will be handled by production guys, sales will be handled by sales guys, finance will be handled by finance guys. Completely wrong statement. At the cost of offending my own professional colleagues, I say, if somebody can say I'm a non-finance person, it is the person who says I'm a finance person. And the rest of the organization are the real finance guys. So the hesitation comes because most people think, even if you believe I should understand this, they think it's a difficult subject and they think it is a boring subject. Whereas both these are myths. Difficulty wise, I have not come across any other subject which is the more common sense subject. Guys, finance, if you don't come to my program or don't learn from books, if you sit in a room and meditate for a couple of days, you'll be able to come up with the same answers that we'll give you. It's a completely common sense subject. And number two, when people think it's boring, I laugh. I said, I'm talking about money. How can money be boring? It's the most exciting thing in the world. But these two misconceptions keep them away. And the price paid is huge. I mean, if it keeps you away from something you don't understand, which is irrelevant, it's okay. But if it keeps you away from such an important subject, which can decide the future of your business, that is criminal. So therefore, I must compliment you also. What you're doing is you're creating an awareness about something which is so important. So the people who you reach out to, they don't realize, but you are doing them a big favor. So hopefully in the years to come, they'll come to know.
Absolutely. Thank you, sir. Something that has been quite talked about lately is the concept of family offices. Back in 2018, India had 45 family offices. And as of last year, in 2024, we've seen an increase to about 300 pan-India. The collective assets under management is estimated to be about $30 billion, really strong projections for growth. What, in your opinion, when is there a point of time in your life, is there perhaps a certain number in the bank account or an aspiration or a certain ambition that one has to have that they should start consider setting up a family office as well?
I think the family office concept makes so much sense that if you're a large organization, of course you need it, because otherwise things get very unwieldy. You got to keep track of the wealth that has been made, the allocation, the tax planning, etc., etc. But I think it's equally important for anybody. So instead of giving it an aura that it is very elitist or something, I think this concept should also go down. I'm not saying somebody who's doing a really small business, but the moment you reach maybe a 100 CR turnover, thereon, I think it should be, because it need not be something very expensive. If you're talking about a dedicated person taking care of your wealth, managing it, looking at it from a tax planning perspective, looking at it, giving it a full-time job, investment should be a full-time job. And if you can't take out the time because you're running large businesses or whatever, somebody should be there. So a family office setting up, I think, makes a lot of sense, and it should come down gradually. It should keep coming. The target should keep coming down. Smaller and smaller businesses should also have that concept.
Right. When we kind of zoom out a little bit and perhaps take a look at the policy landscape, something that we saw very recently was, of course, GST 2.0.
Yeah.
The response to it has been fairly all right and quite positive, I would say. The auto sector, of course, sees it as a potential demand booster with smaller cars and two-wheelers. We're seeing the tax cuts from 28% to 18%. Even with real estate, for instance, we're seeing fewer layers of tax across the supply chain, improved credit flow, things that could, of course, boost buyer confidence and, of course, have long-term growth as well. What are your thoughts on GST 2.0 as a business owner?
No, I think anything that reduces a burden on people is always welcome. If your cost goes down, your demand is bound to go up. So I think straightforward impact of that is if the rates have come down, products will become relatively cheaper. If they become cheaper, the producers will find it easier to sell. Consumers will benefit. Everybody has to be happy about. They only have to be unhappy when taxes go up. Nobody can complain if they come down.
Yeah.
So I think it's a wonderful thing that has happened. It'll also do good to the stock market.
Anything that you would have wanted to have a slight change in with the GST?
I would like it to be reduced to zero, but that's a biased opinion.
Right,
So, taxes who pays happily? So lower the better.
Yeah.
But the country and the government has to take care of their requirements also. So it's a very difficult balancing act. It's a completely unenvious position they are in. So if you don't charge, how do you run the state and the country? But if you charge too much, you are unhappy. So you can't always keep everybody happy. But any little sweetener like this is welcome.
Got it. Something that you had touched upon very early in the interview was talking about contributions. And looking ahead, are there any things that you think that should become a trend in terms of people wanting to become more knowledgeable about a certain aspect, or anything that you find really exciting that one should keep an eye on?
I'll only speak from a finance perspective that this is one subject that has to be made more, you have to popularize it more and more. It helps on a professional level, it helps on a personal level, it helps on a national level. You'll see countries that practice good finance management do better. Countries that, there are countries and economies failing due to bad finance management. Countries in Europe, Greece, Portugal, Italy, countries South America, Venezuela, down south from us, Sri Lanka. So national level it is required, business level it is required, personal level it is required. So I think all of us need to pool in together our energies and make this spread this as far and wide as possible. I think everybody will benefit from that. So I'm excited about, what I'm excited about is the new generation's interest in this subject. I mean, when you log on to YouTube or something, there's so many people talking about stocks and investments and this and that, which probably never happened when we were young, I think. So I think that's a very, very good trend.
Right. You recently launched a book that was geared towards younger children
Yes.
and younger adults also trying to become more financially literate. For people who have businesses and want to eventually pass it down to their children as well, how can they make use of these books or concepts to ensure that their children are also strong enough and financially competent to lead the businesses
So
forward?
if you want to learn the subject, if you want to master the subject, there are various ways of doing it. There are expensive ways and there are cheap ways. I think the book, I can say for myself, what we give after charging huge amounts of money is the same matter that we give in a book which costs hundreds. So frankly speaking, nobody can say, I can't afford it. Whatever your budget, you'll be able to learn the subject. So that excuse is out. And I think these books are a wealth of knowledge. So without hesitation, I say, just because you do an expensive course doesn't mean you'll get something more. If you pick up a cheaper version, you'll get something inferior. The book contains the same knowledge. So grown-ups, we have books for grown-ups, of course, also. And now we thought, why not reach out to the kids early in life? So,
That makes sense.
yeah.
When one is trying to learn more about finance, like you said, there's a vast amount of information out there. You know, you type in one query on YouTube or Google or even ChatGPT now. You know, you really get so much information that for a person it might be fairly overwhelming and just not knowing where to start. How does one actually start?
I think that's a very good question, because on the positive side, it's very popular, lots of people are talking. But on the other hand, doesn't mean everybody who talks sense. Uh, for example, in the field of personal finance, there are so many people talking to you about investing and stocks, and doesn't mean they know what they are saying. What I find scary is I know people who've probably done a one-day course with us have now teach online. So how to sift through all this, I'm really clueless. In fact, I have exited from the personal finance talking about it, because so many people talking, you're part of a crowd, there's no point doing that. So I don't know how to answer your question. Very difficult. There are all kinds of people over there.
Do you think that there should be perhaps like a checklist in place or maybe a qualifications in place
But
now that
how?
with
It's a
SEBI
chicken and
has-
egg story,
Yeah.
right? The guy who doesn't know wouldn't even know how to use the checklist. So,
Yeah.
so maybe a little research about the background of the person, little research about maybe the qualification. Not that I'm a great believer in qualification. I know people with zero qualification talk so much sense, and I know highly educated people who talk a lot of nonsense.
Yeah.
But all those things put together will give you a fair idea. Maybe reviews of people, what people have commented on it, those kind of a things. Yeah. So if you're going online to study, then do a little bit of research about the person teaching also, to
Right.
make sure they're a genuine person.
Right.
So.
For any viewer or listener who is new to you and has perhaps not been familiar with your courses just yet, what would you say is the best starting point for them to get familiar with your courses?
I think books. If you're running a business, I think not because I've written, but that content of that book, everybody say romancing the balance sheet. I mean, you can't not know what's in there. Learn from anywhere. Learn from me, learn from somebody else, but learn those things. If you want stocks, I have a book called Flirting with Stocks. Personal finance, there is something. So books are there. The easiest, fastest, cheapest way to start is the book. And then if it appeals to you, then you should go on building over it. So.
Fantastic. Any last words for our viewers who might be business owners or who are looking to start their own business at some point?
Business owners, at the earliest, arm yourselves with financial knowledge. People starting your businesses, startups, normally the last thing on their mind is finance. Finance, what is on their mind is the money. They need money for the project. But finance management, it doesn't even cross their mind. We read about a successful startup, but what we don't read is out of 10,000 startups that begin, 9,900 may have shut down. And my thinking is most of them would have shut down because of financial mismanagement. So if startups can arm themselves with financial knowledge right at the early stage, that will help you immensely in your journey. So it applies to both new founders as well as existing founders. Easier to convince the existing guys because they've already paid the price of not understanding and they've realized it. But everybody should. Everybody should.
Right. Thank you so much, sir, for being
Great
on
pleasure,
our podcast. Great to have you here. We got to learn so much today. I'm sure that people who are listening must be, really scribbling down notes from whatever you said today. Thank you so much for coming, sir.
Thank you. Real pleasure. Thank you.